Last time we were looking at the RSI, the Relative Strength Index, which is a very powerful indicator, since it tells us whether the market is overbought or oversold. So we can get out, take profit when it's very overbought, and buy when it's oversold. Here we're going to look at the moving averages. So we can just click on indicators, pick moving averages, and they're added. We can then change the settings. So if I just click here, I can change how many days I want to average over. I can change what it is that I'm averaging. So here I'm talking about the closing price. I just take the price at the end of the day and average the last 20 days to get the 20-day moving average. I've picked the 20 and 50 here because they seem to be significant. So you can see here, as the Bitcoin prices have been going up, they've always been above the 20, with occasional dips, but rare. So it's comforting. It's nice to know what the 20-day moving average is, because, as I said, most of the time it seems to stay above that. In the rare times that it does dip below the 20, the 50 has been a strong support. And likewise, if we added the 10, that would probably be just supporting all of these prices. So depending on whatever thing you're looking at, you want to experiment around a bit. See, what does the 10-day look like? What does the 50? Are they important when it comes to this thing? So that's how moving averages are helpful. That once we've found the relevant moving averages, so like for example, if I go 20 seems to be good here, I want to wait till the market is down to about the 20-day moving average and buy. Kind of like I could buy when the RSI was 30 or 40, depending on what instrument you're looking at. So the 20 seems to be a good guide. If the price is above the 20, I want to be long Bitcoins, and I can hold on to that, and typically that has been the case. So if I'd bought it at about the 20 here, when it's above the 20, you want to be long, and you would have been making more and more money. And when it dips, it's always above, or it's nearly always above the 20, whilst it's in its bullish trend. And nothing stays the same forever. So we can see as time goes by, here it dipped to 20, here it dipped to 20, so 20 is holding strongly. When it picked up pace, 10 would have been the most likely support here. So what I can do here is just check that. So first of all, I'm gonna, where'd that go? Yeah, zoom in a bit. I'm just gonna make this into 10. So we can see here that the 20 had been the support during the uptrend here, but now when it accelerated, suddenly the 10 was holding. These were probably along the 5. So you can add multiple different moving averages to see, what's going on. In this case, when it fell through the 10 and it actually fell through the 20. So at this point, you'd want to go, I'll wait. Maybe it's just a little test where it dips below the 20 for like 10 minutes. But you could also just go short once it goes below the 20, because 20 seems to be key. I'm just going to make this back to 50 because that'll give a more long-term picture. Okay, so we've just broken through the 20. It would probably want to test the 50. So maybe I'd be thinking I can still stay short. It's going to go down, down, down. But basically, and this is the 20 week, not 20 day. So the 20 week is quite a long time period. So if it's broken below the 20 week, then, or even below the 10 week, I'd say, then it's up to, now the market is bearish. Now the trend is down. So without looking at anything, I could just go short, because every day we're getting lower lows and lower highs. It's just falling and falling and falling. I'm just going to look at the daily one again. Yeah, so if we zoom into shorter time intervals, we get a clearer picture at times, a more detailed picture. The weekly or monthly ones give a bigger picture, a more trend, get more the big trend. So if I look at this, you can see the 20 and the 10 are there. It's managing to occasionally touch the 20 here, while before the 20 was, it just touched the 20, but it was nearly always above the 10. Then this is the daily one. It broke through the daily, it broke through the 10, it then faced resistance at the 20. So that seems to be quite clear that, the moving average is playing a role. It is showing something. So when it broke through here, it is now trying to test the 20. In general, the 20 is held, so a lot of people would be going, when it dips down to the 20, I'm going to buy this because this is a good buying opportunity. But then it's smashed through the 20. And now we have the 10 is below the 20, which is more bearish. So at the moment, the moving average indicators are bearish. And if you follow the trend is your friend, you just want to be short Bitcoins until the charts change. So would I enter at this level? It's probably not a bad idea, but you'll probably get better ones. So I'd want to wait till the RSI was maybe a bit better, or like here, when it was falling, it will also test to see whether how solid this down move is. So you will get an opportunity to enter at a better level. So here we've just had a move up to here. The green candle there. Now it's testing on the downside again. It'll probably break. We'll get a new lower low. It might go down a little bit here, but then it will try and test, this 10-day moving average kind of level again. Another powerful tool is Fibonacci retracement. So what that is looking at moves like this and going, the price, it was, say, here, it went all the way down here, but we'll have a Fibonacci retracement where it'll go maybe halfway between the high and the low, or maybe like something like 2/3. So there are certain levels which the market tends to check. So we'll have a look at that next.